Elon Musk's announcement of the Tesla stock split has had traders and investors in the stock market on a high. In a Form 8K filing with the U.S. Securities and Exchange Commission, Tesla Incorporated announced its intention to seek stockholder approval at the upcoming 2022 annual meeting of stockholders to increase the number of authorized shares of common stock. The date for Tesla's 2022 annual shareholder meeting has been scheduled for Thursday, August 4th, and Tesla's new headquarters in Austin, Texas, will host the meeting. During the meeting, Tesla shareholders are likely to vote on the stock split. We'll be covering everything there is to know about the upcoming stock split, so be sure to stay tuned. Tesla said in March that a stock split would take place this year, provided the company's shareholders approved it at the annual meeting. The electric automaker based in Austin, Texas, had not set a date for the meeting yet, but it has now been made public. Tesla's stock rose about 8% on the day of the stock split announcement, adding nearly $84 billion in market value and bringing the stock back into positive territory for the year. The effect of the news didn't seem to last long though, as the stock price has gone back to its former lows, showing just how volatile the stock is. As a result, Tesla is now trading at roughly $872, with a market capitalization of nearly $904 billion. The announcement of the shareholders' meeting date comes a day after the electric vehicle startup stated that it was delaying its proxy filing, according to a 10-K SEC filing that investors are eagerly expecting. The filing is likely to shed further light on the stock split that was announced in March. This meeting is more important than previous meetings since it will pave the ground for a new stock split. Because of what happened in the past, investors appreciate the concept of a stock split. When Tesla announced a stock split in August 2020, shares climbed more than 60% in 2.5 weeks between the announcement of the stock split. Tesla announced another split in March, and although this is the second split in as many years, it will take a shareholder vote to increase the actual number of shares authorized in the company's bylaws. At the annual meeting, there will be a vote on this. Many believe that the vote will be purely ceremonial and that the concept is unlikely to be rejected by investors. In Tesla's news release, there are no details on the split. Investors will have to wait a little longer for details on the upcoming split ratio. Following this current announcement of the shareholders' meeting date, Tesla's stock hasn't moved much. In pre-market trade, the stock was down 0.3%. Tesla's shares have dropped roughly 18% year-to-date as of making this video. The majority of the decrease occurred in April, during a broader market sell-off and some dips following CEO Elon Musk's announcement that he planned to buy Twitter. Tesla allegedly needs extra time to complete a normal disclosure before its annual shareholders' meeting, delaying a likely announcement of new share insurance plans and a stock split. Stock split ratios and dates have yet to be announced. Nothing is set in stone until the future shareholder meeting, where shareholders will vote. In a securities filing on Monday, Elon Musk's electric car market leader said it wouldn't be able to publish a proxy statement until later this year without giving a precise date. However, following the end of its fiscal year on December 31st, Tesla faced an April 30th deadline for filing its shareholder proxy. As we mentioned earlier, since its 5-for-1 stock split in 2020, Tesla has gotten a lot of attention, and the spotlight continues to shine on the electric vehicle company. If you're considering buying Tesla stock, don't let the prospective stock split be the only factor influencing your choice. If you want to benefit from whatever stock you buy, there are more vital aspects to consider. Vehicle deliveries, revenue growth, and free cash flow should all be top priorities for Tesla shareholders. Most stockholders now allow us to buy fractions of a share in high-priced tickers like Tesla, so the specifics of how many shares you can buy for $1,100 are less essential. Although Tesla's recent stock split plans have sparked a lot of interest among investors, Charlene Reinhardt, CPA, told Go Banking Rates that the move is only a cosmetic change that won't make your account fatter. As we previously noted, focusing on the core business is preferred for investors. Pay attention to criteria like income potential, production capacity, and growth in automobile deliveries, she recommended, if you want a chance at long-term success. Tesla's stock price increased by 80% between the announcement of the stock split on August 11th and the 5-for-1 stock split on August 31st. Although those outcomes were excellent, they do not guarantee that the next possible stock split will provide similar results. The most optimistic view of stock splits is that they indicate something positive about the company's management expectations. A pessimistic viewpoint holds that value does not change and that a split is unimportant. A firm might use a stock split or a reverse stock split if it's concerned its share price is too high or too low. A stock split can help a firm lower its share price in order to attract new investors, whereas a reverse stock split can help a company increase its share price and keep its listing on major stock markets. So what exactly is a stock split, and how does it work? A stock split occurs when a company's board of directors releases additional shares of a stock to existing owners without diluting their stake's value. A stock split increases the number of outstanding shares while lowering the value of each share individually. While the number of outstanding shares fluctuates, the company's entire market capitalization remains constant. A stock split can motivate individuals who aren't currently stockholders to invest. For example, if you couldn't afford a Tesla share before the company's recent split, you might be able to now. Assume you own one share of a corporation's stock. If the firm chooses a 2-for-1 stock split, you'll receive an additional share, but each share will be worth half as much as the original. Your 2 shares will be worth the same as the one you started with after the split. A 2-for-1 stock split instantaneously doubles the number of shares you possess. Stock splits of 2-for-1 and 3-for-1 are relatively common. While Apple and Tesla have received a lot of attention for their 2020 stock splits, their 5-for-1 and 4-for-1 splits were unusual. The opportunity for more individuals to buy a stock can raise its price, which can boost a company's value, at least momentarily. Holden explains that as individuals are able to buy, there is more demand, and the price may rise. If you have more shares, holding on to them can be beneficial. However, that increase in stock and total worth is usually only temporary. To reap the benefits of long-term gains, you must typically own a stock for that extended period. Currently, clients can acquire fractional shares of certain stocks in exchange-traded funds through investing apps like Robinhood, Stash, M1 Finance, and SoFi Invest, as well as classic brokerages like Charles Schwab and Fidelity. Because there isn't a lot of data right now, it's difficult to say how fractional investing will affect investing and stock splits, Holden adds. However, I believe it will be a long time before fractional investing completely eliminates the necessity for stock splits. That isn't even taking into account the psychological impact of stock splits. Humans like round numbers, Holden says. For many investors, knowing that they have enough money to buy a whole share motivates them. Finally, a stock split or even a reverse stock split doesn't significantly influence a company's existing shareholders. The main impact of a stock split is on investors who are watching the stock and expecting to buy a full share at a lower price. A stock split can be a tremendous stimulus for those investors who have been sitting on the sidelines. However, because there will be a Q2 2022 earnings call in July, we will most likely have the Tesla stock split ration information well before August 4th. Which could be the moment this missing piece of the puzzle is solved. It'll be interesting to observe how Tesla's stock price reacts to the news in the coming days as more information emerges. The annual meeting is likely to declare the date for Tesla's shares as well as the split ratio. In addition, Tesla's quarterly earnings will be extensively scrutinized during the upcoming earnings season. What ratio do you think the stock split will be? Comment down below.